Hey Sudhir, how are you?
I'm good. Praveen, how are you?
I'm doing great. I'm doing great.
Wonderful. So all good?
All good, Sudhir.
Yes.
I think maybe couple of 2, 3 years.
I think 2017, I think.
Yeah, 17. I remember 17 or 18, but at least minimum of 3 years. Right.
Correct, correct,
We
correct.
would have been good buddies. Partners. Anyway, we never know. We never know.
Yeah, Hari is doing well in Alpharetta.
Yeah, the other day I called him and opened another company with
Oh,
him.
is it? Oh, you are with him? You are working with him?
No, yeah, I'm working with him. He's good. Whenever I call, he responds to me.
Yeah, yeah, he's a nice guy.
Nice guy.
Yeah, I
So,
was.
are you in Dallas today? Or
Yeah, I'm in
anywhere?
Dallas. I'm in Dallas.
I know that you are very busy. Jyoti tells me that he's traveling or something. So I didn't disturb you. I didn't want it to anyway.
No problem. Next time when I come to Atlanta, we'll meet.
Sure, sure.
I was there for a brief visit to.
Sharat told me.
Yeah,
I
yeah.
was in India. I'm in
You are-
India still.
Oh, you're still in India, is it?
Yeah, yeah, yeah. Some personal commitments were there, so I got to come, Sudhir. So
Mm-hmm. I am now totally focused on wealth, actually, tax reduction and
well,
wealth.
yeah. Sharath told me he keeps on sending me to invest, but I wanted to see sometime. I wanted to work with him as well.
Okay, okay.
So I
Yeah, yeah.
think Sudhir, we have a lot of questions today. I think it 1 hour also will not be sufficient typically. I don't know. We have to cut down something and then we have to do next one more whenever you are available.
Sure. We will stick to the time.
Yeah.
Now what is the plan? You will be recording this and then it will be playing, is
Yes,
it?
this will be live recording, and I will also edit this in my channel, and I'll send it to you if you want. Then you
Okay,
can take from there. You
okay.
want original version, I can give. If you want editor version, whatever you want, I can give.
Sure, sure. Edited version would be good.
Yeah, I'll give it. So 10 minutes we have. So what we will do is I'll just brief Sudhir. I think what I'll do is I'll introduce with your designations and everything, and then I will talk about little bit of my tax filer and also the tax CFO franchise, and then wealth planning. And I will start with the question about your journey because that is also inspirational, right? You are a IT and you all of a sudden moved into you were in Infosys. That's what I heard in one of the interview.
Yeah, yeah. I was with
I
Infosys.
just studied about you a little bit,
Sure.
but it's very interesting. So the whole program is for NRIs, Sudhir. I wanted to make more popular this one. I'm also trying because I don't get any sponsorship because I want to make this. These all are very useful. Actually, for tax, more people will come. I'm also just thinking how to put more three like LinkedIn, Instagram, and one more Facebook Live so that I wanted to expand this because all the people are coming like you CEOs, presidents, vice
Hmm.
presidents, CFOs.
Mm-hmm.
So it's going good. I started just for passion, and it's been a 1 year plus 1.5 year, and I've been continuously doing it. Is my fifth. I think I crossed 40, 50.
Oh, is it?
Unknowingly I crossed 40, 50, and still continuously I'm doing.
Mm-hmm.
So
Now,
next week,
now tell me, this will be played on Mana TV, is it?
yes, Mana TV in Yup TV, TV5, and sometimes they'll play in TV5 satellite version as well.
Okay, okay. And when do they play this? This on regular TV or
Regular TV also they will do, Sudhir.
okay,
But we don't know when they will do because if it's all whenever they don't have this recorded, they will be keep on playing sometime.
okay, okay. So have you heard from anybody as to what value they get from this recording in terms of new business or contacts or anything like that?
I have never asked those questions, so that's what I was. People were giving me a lot of suggestions how to do sponsorships and all those kinds of stuff. So I said that as I go into money, liability, responsibility, this I am doing very, very a good informational video. So the moment I get into business, then it's gone. So voluntarily, if anyone wants to support, I will definitely entertain. But mainly, I think we need to promote this. That is where I'm lagging. I don't have so much time that I can do, but I will do all my groups. At least this will go in all Mana TV groups, Mana TV Facebooks, my WhatsApp group across Atlanta, USA. And I have many groups like Indians in Houston, Indians in Atlanta, Indians in all Indians I have.
Okay.
So I have one more guy, and my team, TV5 team, also will help. Mana TV team, they'll be helping me.
Okay. Okay.
So
Because
everything is voluntary service now.
yeah, because my tax filer has got a lot of branding,
Okay.
but the wealth business, right? Legacy wealth. I am trying to get the name out because last 1.5 years with COVID, we did extremely well. We sitting at home, just helping a few of our tax clients. We have still not even tapped into all our tax clients, and the wealth business is booming. Uh, yeah, we'll talk after this session.
Yeah, if you can support me, then you will be my first client where I can make this monetize. Little bit monetize will help me to hire some digital marketing guys and all those kinds of stuff.
Sure. After this, I'll talk to Sharath,
Sure.
and we will. And for me to really get value, whatever branding comes, right. But also, given that you are so much well connected in the Atlanta market,
Yeah.
your own connections, 2 or 3, I think, will satisfy the budget that I will give you.
Definitely.
Because wealth business is not like tax business, right? It'll grow. It is continuous business. So that way,
I'm more than happy, Sudhir. Why would I? At least this is also helpful to them, and I'll make little money, and definitely will talk. I spoke to Sharath also. He said me and Sudhir will come up with something,
sure.
but this program itself got delayed. That's the reason we couldn't do.
Yeah,
We'll do now. It's 6 more minutes.
sure.
So overall, your schedule is hectic, Sudhir, now.
Yeah, what has happened is we got a VC funding in our tax and CFO business, which was a
Mhm.
very good move in June. So now we are governed by a board, and there is a lot more accountability in terms of growth and all that.
Mhm.
So Supriya runs that business, my wife. But wealth business is such a vast area, right? Tax is vast, but wealth is even vaster.
Mhm.
Uh, and what I've seen is, there is no shortage of knowledge. There is amount of studies and reading and number of products that are there in the public market space, the alternative investments, and it's taking a lot of time. And on top of things, our Indian community is very demanding, right? The
Yes.
returns that they want is not like what retired Americans or Americans in their 50s would expect. Their expectation is all double digit all the time.
Of course.
So that means you have to really work hard on figuring out different models of making money, such as pre-IPO funds and
So I also can do some webinars. I got a good, whenever I put at least 60 to 100 people will come when I do anything. So
Hmm.
I think we can utilize that and monetize something. So
Yeah, so
definitely.
the wealth business, right, is usually for people who are accredited investors,
Okay.
people who make more than 300K or $1 million of net worth. So these people is hard to get on a call, or so there has to be multiple ways of penetrating into them. But if people do, because people will like what I say, because we work very hard to bring these things. It's not like what Edward Jones or Merrill Lynch or Morgan Stanley or one of these companies offer, right? We work very hard to bring land deals in Dallas, pre-IPO companies, hedge funds, a lot of different real estate investments and things like that.
Mhm.
So what we have, I don't think there is any other financial advisor in at least
Yes,
Dallas.
definitely.
I don't think there is one who kind of can match to what we offer, right? So clients will immediately like it. It's just that we have to be in front of the client. That's all.
I think we can do, but little bit guidance you give it to me so that I can bring the right people. We don't want all the audience. We
Correct.
need, as you said, we need at least a 200 above bracket people.
Right.
Let me call. He is ready here.
Sure. And the market is huge right now with after COVID, right? With the PPP
Mm-hmm.
stimulus, Indians getting
So
more
opening that.
jobs. Yeah.
Lalesh, ready?
Yes, sir.
3 minutes. 3 minutes we have. We should start on time. Okay. So one. You're ready, huh? No. Still 3 minutes are there. We will finish 3 minutes and then we'll go. And exactly 40 minutes from now, Lalish, 40 minutes ki ready gundu. Okay. Because so many questions ఉన్నాయి. Maybe రెండో episode కావాలి for sure. లేదా 40 minutes చేస్తాను. ఇంకొక ఎపిసోడ్ చేద్దాం మళ్ళీ. ఇప్పుడు కాదు మళ్ళీ నెక్స్ట్ ఏదైనా ఒక వీక్. సార్కి ఎప్పుడు ఖాళీగా ఉంటే అప్పుడు. రైట్.
How is your friend doing? Praveen? No, you are Praveen, the other guy.
Viju.
Viju, yeah.
I came out of that. So ideology media, I came out of it and I took on my own. And it's long time I didn't even talk to him. Just when
when I met also, it felt like he's a very shrewd businessman.
Yeah,
and it's not going to be a win-win. It has to be one-side win. So
true. Everyone also told me, I don't know why you. Anyway, now we will not talk on that. We'll talk again.
We'll talk good stuff.
Yeah. Ready, sir? 10 seconds? Yes, ready. 9, 8, 7. Ready, Sudhir?
Yeah.
5, 4, 3, 2. Good afternoon, good morning and good afternoon. Welcome to Mana TV and TV5. You are watching Insight with Praveen Puram live from Atlanta. Today, our esteemed guest is Mr. Sudhir Pai. He is talking live from Dallas today. And we have been discussing more in our previous episodes, more on the entrepreneurship. Now, today's topic is a really hot topic, that is tax planning and benefits of real estate. Today we see in US, the real estate market is bubble, and we will know more from our show what are the benefits of investing in real estate and also the tax planning. Welcome, Sudhir. Thank you so much for coming on to my show.
Thank you, Praveen, and thank you, Mana TV, for giving me this chance to come on your TV and speak to your, to your listeners and viewers. Good morning.
It's our pleasure, Sudhir. So let me introduce Sudhir. Sudhir is a certified CPA, certified public accountant, licensed in state of Texas and Colorado, a fellow chartered accountant from ICAI India, a chartered global management accountant and an enrolled agent. Admitted to practice before the internal IRS, Internal Revenue Service. His experience and result-oriented leadership have propelled to a company called My Tax Filer. So Sudhir is, if we talk about Sudhir, he is before entrepreneurship, he was also like us, an IT guy. But soon after, in 2008, he started My Tax Filer, seeing the need for the tax filers, for all the NRIs who are living in USA. And today, he has 16 branches across the US, Canada, and also India. He has also a back office in India. And along with that, he has also another company called Tax CFO Franchise, where he is a support and he provides on-demand CFO expertise to early stage startups. So definitely Sudhir's insight on taxes and also the real estate investments, that would be a great vision to us or insight to us. And also Sudhir, recently he started wealth planning, which is really, really important for all of us. And we'll get to know more from Sudhir. So Sudhir, again, welcome to Insight with Praveen Puram. So we all want to know more about tax planning, right? Every NRI want to hear, this is the hot topic, how to save money from our hard-earned money. So this particular show, Sudhir, we have started for NRIs to benefit NRIs. Any topic which is really relevant to the NRIs, I am bringing those particular leaders or thought leaders into this show. So, Sudhir, tell us more about your journey and companies to our viewers and audience.
Sure, Praveen, and thank you for all your community support. I have been seeing you personally. We met in Atlanta in 2017 when we started our Alpharetta office, and I have seen you working hard for the community, and thank you for your service, Praveen. So coming to my journey, I started at Infosys in '97 and worked there in India for about 2 years. Then they relocated me to the US, to San Francisco, and in a short span of about 11 years, which was my first job at Infosys and the last job, I was promoted to the CFO of North America, and that's when I decided that there is a lot more in career that I can do. So I decided to step into entrepreneurship. 2008, I started My Tax Filer, which is today a company with close to 250 employees, uh, almost 16 locations, as you mentioned, all over the US and India. And then in 2012, we started My Startup CFO, which supports a lot of entrepreneurs in the Bay Area, all the tech CEOs, with the CFO service, accounting, tax, and help them with the entry and exit to their business. And in 2019, I started Legacy Wealth Planner, which is into wealth planning. And the reason we started wealth is one, because tax is a very strategic stuff, but still, it's only once a year or twice a year engagement with clients, whereas wealth is a round the year engagement with clients. And as I have seen myself grow in this country, in this country full of opportunities, in almost 21 years of my career in the US, there are a lot of NRIs in this great country who achieve a lot of success, and planning their wealth becomes very, very important.
Absolutely.
Right? Planning tax is important because you end up paying close anywhere between 37 to 55 cents on a dollar to IRS and states, just the income part of it. Then there is estate tax, there is wealth tax, and there is wealth tax in India and other countries. People who live in other countries, they may have wealth tax exposure. So tax is certainly a very, very important topic, but wealth is even more important because you have to save what you made and grow that, because today the rate of inflation is so high. The current President Biden is talking about raising the tax rates on everybody, more so on wealthy individuals, and as we all know, Indians represent the top between 1 and 5% of wealth earners or income earners in the US. A lot of Indians today do fall in that bracket. So there is a very important need for taking care of their tax, their compliance, because of the two countries that get involved with US and India. And lastly, but most importantly, the wealth aspect of it. So that's what is my little journey, Praveen. I still think there is a lot more work to do, like what you have been doing for the community. I'm trying to do my part, and it's fun.
Absolutely, absolutely, Sudhir. Coming from an employment and started your entrepreneur journey, and today you have 250 people working for you. That's a great inspiration for all of us. And definitely the topic what you have taken, I see everywhere that you are there in the community with My Tax Filer, and people look for tax filers to learn, because today all the most of the NRIs, if you see, 70% of the people just go use the software, build it, and come out of it. But truly, they need to know more insight how to, do more planning to save the tax. So, before we know more about tax planning today, we will quickly jump into one aspect, right? Today, Biden's administration, and previously we had Trump, right? So, during this transition, tell us more about what are the changes in the different tax laws. To your knowledge, what are the different taxes which came into effect in Biden's administration and which needs NRI's attention to take care of their tax planning.
Sure. That's a very important point which people have to read through, because right now it is just the proposed law, but very soon it will be a signed off law which needs to be followed from the year 2022. So most of the provisions that President Biden is talking about in his $3.5 trillion reconciliation budget is spending that money by raising taxes on the wealthy. And he defines as those who make more than $400,000 of income, of AGI, adjusted gross income, as wealthy people of this country. So those who make less than $400,000 may not really see any tax increase, but those who make more than that certainly will see a big hit. Some of the changes which are very important for individuals to know is the tax rate today. The top tax rate today is 37%, and I'm only talking about federal taxes, not the state taxes, because state taxes could vary from state to state. But federal tax from 37%, President Biden is talking about 39.6%. And this 39.6% applies to income above $400,000. Earlier it to be $600,000. Now it is $400,000. So basically, people who make more than $400,000 of income are going to pay a lot more taxes. The social security tax, which usually gets deducted from paycheck, or from, if they are business owners, when they run their payroll, or when they file their return, called as self-employment taxes. This tax is right now 6.2% on up to $137,000. Okay. This rate is going to go up for those who make more than $400,000. So keep in mind, these people who are in the Silicon Valley, all the IT guys, who get the stock options and stock-based compensation. I'm seeing W2s these days of $400,000, at least 2 or 3 in 10, and that is because my tax filer does a lot of returns for even the income earners below $400,000. Because when I started my tax filer, the idea was to create something like a turbo tax for Indians. Because our first idea was taking care of people, making sure that right from the beginning their compliance is clear, right? Whether it is foreign bank account reporting, filing tax returns in India, filing tax returns in US. They have come as a student, filing it the right way. So all of these compliance was what was very important for me when I came out of Infosys. Very soon I realized that compliance is important, but people want to save taxes. That's more important. And that's when we also started wearing our hat of a tax planner, and we are very good at it today. And the third part of tax increase is the long-term capital gains tax. So the current bill that is in front of the Congress talks about a tax rate of 23.8%, which is today's rate, increasing it to either 28% or regular tax of 39.6%. In my opinion, it will be anywhere between 25 and 28%, most probably 25%. And they have also said that any capital gains after September 13th, 2021, meaning few days before, that means they have kept the date as the starting date. Any gains after that date, you would end up paying long-term capital gains tax at a higher rate vis-a-vis what it is right now. Right now, the rate is 20%, 15 and 20%, plus another 3.8%, which is called as the Obamacare tax. That's going to change. That 20% can go up to 25% or even higher, depending on what is the final rule, right? Now that's going to have a severe impact on capital gains. Particularly, we have seen a lot of people generating a lot of capital gains sitting at home, during the COVID time, and doing option trading and mark-to-market elections and all of those. So they will get hit, and this may also impact the markets. Now government has, the Senate and the Democrats have very clearly come out with the date that September 13th onwards only the rate will increase. So that means the stock market may not move that much, but we don't know. Again, this is just a bill. It is not the law yet. It has to go through its cycle, its iterations before the real impact can be known. And on the corporate side, Praveen, there are a lot more changes. Corporate tax rate for a C corporation, right? When a small business owner has three types of entity structures and regular LLC, which is taxed as a partnership, then you have an S corp, then you have a C corp. Now, C corps, the tax rate was a flat 21%, but that is going to be changed to either 28% flat, or there may be a slab, which is basically 15% on up to $100,000 or $400,000, and then additional amount. And also there are a lot of other changes that are being discussed on the business side, like the qualified business income deduction, the depreciation. They are talking about removing the whole like kind exchange or 1031 exchange. When you sell your real estate, you can invest that money to buy another real estate and not pay taxes ever till you sell the second property, right? That they are thinking of taking it away, or they are thinking of limiting it to those who make $500,000 or less. So a lot of changes coming up. On the estate tax side, estate tax is a tax that somebody has to pay when they pass away. So when they die, the government takes 40% of your money if your money is in excess of $11.5 million.
Wow.
Right? So a lot of people are not aware of this, particularly the NRIs, because they are always thinking about income tax, and nobody who are young, they think about estate tax, because we all feel we'll live forever, right? So
Yes.
that's how our energy is as immigrant Indians in this country. We are so focused on our ambition and career and family. But one thing to be kept in mind is estate tax and probate. Having a living trust, a will is very, very important. We are seeing a lot of NRIs, unfortunately passing away to COVID or accidents and things like that. So having a proper estate plan is important, not only to save estate tax, which is a long-term thing, but immediate purpose of to protecting themselves. So that's very important, having a simple estate plan. So this estate tax limit of 11.5%, President Biden is thinking of bringing it down to anywhere between 3.5 and 5.5. That means if somebody passes away and their income is above $3.5 million, anything above that, you end up paying 40% to the government. So this is over and above income tax. This is not income tax. This is estate tax. So President Trump increased it from 5.5, which was President Obama's number, to 11.5. Now this number, President Biden is thinking of bringing it back to 3.5 or 5.5. Most probably it will be somewhere in between that or 5.5, bringing it back to President Obama's number. But this will severely impact, because over the last 10 years, people have made a lot of money, and people are looking at paying this at the time of death. So it's better to use this $11.5 million limit that you have right now. IRS has very clearly said, if you take advantage of this $11.5 million today by gifting it away to somebody, or by putting it in a trust, then you are good on that $11.5 million. Even if it comes down, you are not affected. There won't be anything called as clawback. IRS is not going to say, hey, now the law has changed, it's no more 11.5, it's 3.5, so return all your previous gifts back. Because one individual can gift up to $15,000 per person. So you
Per year.
can give per year. Yeah, you can give me 15, I can give you 15. Like that, people can gift each other only 15. Anything more than that, if the gift, that goes against their $11.5 million threshold, right? If you give me $100,000, $85,000 gets reduced from your $11.5 million. So that is how the IRS keeps a check. That's like a clock. It keeps going down. So people in this country keep gifting. Some of our friends, Indian friends, don't consider gift as a gift. They don't understand the law. So, but it is a law to record a gift which is above $15,000. One has to file a gift tax return if they give more than $15,000 to a friend or a family member, or anybody that they want to give a gift to. So these are very high level highlights. Praveen, the change in the law is huge, enormous. But I think right now everybody is trying to figure out what is going to happen. We are all reading on a day-to-day basis, trying to digest the things, figuring out what is fair, what is not so fair, and what may happen, what may not happen. So right now it's a big question mark what is finally going to happen. But one thing is very clear: tax is going to go up, because the deficit of this country is very high, and somebody has to pay for it, and we are the ones who are going to pay for it. Otherwise, the social security fund is going to go zero very soon. By 2034, I think that's going to get exhausted. So President Biden has a lot of responsibility on him to fill that up, make the budget deficit smaller. Somebody has to do it, so I think he is going to do it, and that's going to impact all of us.
Great insight, Sudhir. So overall, there is no good news for individual, for corporates, for all estate planning. Everywhere you could see that there is going to be a tax increase in Biden's administration.
So the good news is that you are bringing people like me on TV and having people know that we exist, right? And we do understand how to plan for it, right? So now it's just a bill. It's still not law. So this is the right time to think about estate tax. Those who have more than $11.5 million, think about talking to somebody like myself, or your neighborhood CPA, or your tax attorney, or your estate attorney, and figure out how to take advantage of the current market situation. I exited out of the stock market 2 weeks back, because September is usually historically a down month. Now, whether it is my luck or fortune, I don't know, but the September 13 deadline came into this bill. So anything before that is long-term capital gain at 20%. Anything after that is a higher tax rate. So that was kind of I felt good that I did this for my clients. So there are a lot of those kind of steps one can take, right? And lot of steps one can take after the change also. So it's in this country, Praveen, you are successful if you have the best doctor, lawyer, and your CPA next to you.
Absolutely.
You can only be successful if you have these three people next to you. Otherwise, you may be successful, but not super successful, and or your success may go down to not being so successful if you don't have these three.
That's true. You have rightly said these three people are very, very essential in our day-to-day life.
Yeah.
But most of the time we are all interacted with doctors and CPS very little, but no one want to go to the attorneys until and it is required. So from our community, I feel that it is very less related to attorneys, especially from the crimes or any other aspects. But I would say definitely, as you said, all the NRI friends. So definitely hearing this to Sudhir, that the taxes are changed during this Biden administration. So please do reach out to us if you have any questions on the taxation or the estate planning or any of your corporate related queries. Please do reach out to me or Sudhir. We can help you in all the ways. So Sudhir, I think the viewers have already sent me so many questions that I'm sure that these 40 minutes won't be sufficient. And the tax planning in detail definitely will deep dive in another session. But I would like to touch upon few things like FBAR, right?
Mm-hmm.
So many of the NRI friends, some might be citizens, some might be still on the visas, and they'll be shuttling down between India and US. And so mostly when the our NRIs are citizens, right? The Indo-Americans. So what is that FBAR? I want you to throw some light on FBAR. What is FBAR? What every individual should worry about FBAR?
Sure. So this used to be a very, very hot topic and a scary topic, in 2008 and 9, when President Obama took over and hit the Swiss banks and tried to bring a lot more money into this country, because people in this country were hiding money in some of these tax havens, Switzerland, Cayman Island, British Virgin Island, and all these tax-free countries. Money was being transferred. Now to bring that money back and to tax all that untaxed money, what President Obama did is, first he went and attacked those banks. Second, he said, whoever has not filed an FBAR. FBAR is basically a foreign bank account reporting form, which means if you have a foreign bank account outside of the US, because it's not part of the US tax reporting network, you have to manually fill a form, or earlier it used to be manual, now it's through electronic, along with your tax return that you have to file. This form needs to be filed on an voluntary basis, because IRS will not get this information from foreign banks earlier. But then, there was also a new law called FATCA that was signed into law, where all the banks who want to do business in the US and want to work with the US banks were required to follow the FATCA law. So this FBAR is a simple 2-page form, which basically asks for account balances of accounts that lie in a foreign country. Most of us come from foreign country, from India, right? So those accounts need to be reported. Second condition is if the account balance of all the accounts put together is more than $10,000, only then it has to be reported. That means you have, let's say you have two accounts, one account has 1,000, second account has 9,000, so that becomes 10, so you have to report. If one account had one, another account had totally $2,000, you don't have to report. So any account balance, totaling of it, highest balance for the year exceeds $10,000, you need to file an FBAR statement along with your tax return. Now, if you don't file that, the penalties are severe. The minimum penalty for non-filing of FBAR is $10,000. And for willful negligence or willful recklessness or fraud, it can go up to 50% of the money that is lying in the account can be taken away by the IRS. It's not income tax, but a more of a punitive tax. It is a penalty. It's like getting a ticket by the cop for speeding on the road. It's for a penalty for not doing something which is required to be done by law. So it's not a complicated thing. Only those who are hiding money in a foreign country need to worry about it. Most of us, in this country come here after struggling in India, earning a little bit of money in IT companies or non-IT companies, come here. It's not a big deal to report. It's just people are ignorant of the law. Now the education is very high because most of the tax preparers, even TurboTax, H&R Block, all of these companies do ask about filing foreign bank account reports because the level of awareness has gone up. But in those years, right, between 2008 and 2015, that is where it was like a beast which started giving a lot of sleepless nights to people, and there were a lot of amnesty programs that one had to follow. Even now there are a lot of people who are ignorant of it, even though they have accounts, they businesses. So if you have a business in a foreign country, if you have a bank account in a foreign country, if you have a trust in a foreign country, all that has to be reported in this country if you are filing a resident return. Now that is where you need a CPA or a tax preparer to educate you, because these two country cross-border transaction creates a lot of confusion and complication in our simple tax return. So once you get that knowledge, then you can do it on your own on TurboTax or H&R Block or wherever you wish to do. But first, spend some time getting one-on-one with a tax guy or a tax attorney or a CPA, and understand your liability and obligations to file in this country. And after that, you can always do whatever is right and easy and convenient to you. That would be my message to your viewers.
Absolutely, very well said, Sudhir. And one more question: you have told about the FR on the $10,000 in a year, right? If the account is lying with 7 lakhs, if you were to convert $10,000, it would be close to 7 lakhs. So typically, what we do is we send money to India, we use them, we consume them for the family maintenance or something else. So will that transactions also count on an average of 10 lakhs, or how is that only amount left in the bank is considered? How you
So
treat it?
the way it is calculated is it is the highest balance in a 365-day year.
Okay.
You have to take your bank statement and see what is the highest amount. So in your example, if you transferred 7 lakhs and then started spending it, let's say on December 31st, that 7 lakhs is 7,000 rupees, right?
Okay.
Now still you have to take 7 lakhs because that was the highest balance in that particular year.
Yeah.
Now, similarly, we take the highest balance of different accounts. Let's say you have 3 accounts. When you total the highest balance, if that exceeds $10,000, that's when you need to file.
Okay. So what will happen if I file? Is there any tax for that, or?
No, it's just a voluntary reporting form. As I said, it's a very simple form. It's just that because this form is used to nab those who are hiding money in a foreign country. This is the only form that can put people to jail.
Okay.
This is as strong as somebody murdering somebody. It's as equivalent. The penalties can be criminal. People can be put to jail for hiding money. But the IRS has to prove that the intent of not filing that form was willful fraud of hiding money in a foreign country. Now, that is not how we should see it. We should see it as an obligation to file, not being filed. What is the maximum penalty? $10,000. Will IRS waive that penalty? Most of the time they don't.
Mm-hmm.
So for filing a 2-page form, if you don't file and if you have to pay $10,000, which person on this earth would like to go through that headache, right? It's unnecessary. So while a lot of CPAs talk about jail and penalties and try to charge as much as possible from their clients, I would request your viewers not to get into those kind of dramatic, dialogues with few people, but focus more as filing, like how you file your 1040 return by April 15. This also has to be added to that. That's it, as simple as that.
Wow. I think that's a great information, Sudhir. So to all of us who are listening and who will be listening this, definitely uh, all the viewers, we would request, if you are a citizen, you want to file FBAR, if you have more than $10,000 lying in your Indian bank, so please do report. It is a 2-pager, and if you have any questions, please reach out to us. And in the interest of saving, again, tax planning, Sudhir, what kind of different opportunities the NRIs have, whether it is a passive or active, to save the taxes?
Yeah, that's a great question, and I'm sure a lot of your people are going to turn their volume high right now. Again, in this country, the way income is taxed is depending on the source of income. Is
Okay.
it wages or salary compensation, or is it business income? Is it dividend income? Is it interest income, or is it other type of income, right? And when I say dividend income, that also includes capital gains and things like that. And then there is also rental property income from your rental properties.
Mm-hmm.
Now, each one of these category of income has different character to it. And
Okay.
each of this character opens up a lot of tax planning ideas, right? For example, charity, when you do a charity, you can deduct up to 50% of your income, total income. So let's
Okay.
say somebody makes $500,000, if they can give up to $250,000 to a charity. Now, which person on earth would give $250,000 to a charity right away, right? We believe in spending some money in temple, mosque, or church here and there. But there are structures where you can put money into a charity today, but do the charity later, right?
Oh.
Like I have in 2010, one of my old clients, approached me and he said, "Sudhir, I have made a lot of money this year because of the company gave me a bonus and stocks and all that. And I have a goal of giving $10,000 to Tirupati temple every year,
Mm-hmm.
right? But now I can't give everything in this year because I have made this income. But how can I take care of my next 20 years of that oath that I have taken of giving $10,000 and take a deduction today?"
Mm-hmm.
Right? So 10,000 into 20 years is $200,000, right? $200,000, $200,000. That $200,000, if you want to take a deduction today, we can create a charitable trust, put it in that, take a deduction, but then start giving $10,000 every year to the temple. So there are a lot of such vehicles which we can implement to reduce your income in the current year. Because any income above $600,000, you pay 37 cents on a dollar, right? So every donation that you make saves you 37 cents of tax, right? So that is on the charity side. Similarly, there are other ideas like rental properties. When
Mm-hmm.
you buy a rental property, you can depreciate it. So you
Okay.
keep getting your rent. That is cash flow, right? You get it in hard dollars to your bank account. Your tenant pays you in dollars. But depreciation is not a cash flow expense. You take the cost of the house or the rental property, divide it by 30 for 30 years, and you reduce that as an expense. Depreciation is a non-cash item which
Mm-hmm.
gets reduced from income, and you pay tax on the net. So most of the time, the depreciation is so high that you don't end up paying any tax, because the income minus the depreciation, you don't have any net income, you save taxes. And for those real estate owners who own more homes, right, we can talk to them about getting a realtor license or spending more than 500 hours in a year and becoming a they are in the business, they are treated as real estate professional, and you can take deduction for a lot of expenses also, like marketing, legal, you can pay a salary to yourself and things like that. uh, and thirdly, business is the best way to reduce taxes, because the money is now in your control. You can spend that money the way you want, or you can put that money into retirement buckets the way you want, not just your 14 your 401k contribution of $19,500. You can put a lot more money into a retirement plan. For example, a defined benefit plan allows you to put almost up to $700,000 per person. So if the husband and wife are the business owners, and they have been running this business, and let's say they make a $2 million net income. Now, out of that $2 million net income, if you are able to remove about $1.4 million away, into a retirement plan, that's so powerful, right? So there are a lot of such ideas, Praveen. I can go on and on and on. Now the Internal Revenue Code is 90,000 pages long, which is very, very complex, right? It is the most complicated piece of book written on this earth. So we'll have to understand what is the current situation of the client, what is the future plan, what is the future income projection of the client, and then come up with the tax planning structure. And that has to be done keeping in mind the cost of that structure, right? Once you set up a trust, for example, there is going to be ongoing cost. So this may not work for somebody who wants to donate $20,000, right? It may not make sense. But somebody who wants to donate $200,000, it may make sense. So that is where we are well known in the community, because we just don't talk to people and charge them a fee and then do something. Whereas we look at the cost benefit analysis, educate the client, get their consent, because some clients don't want to do anything. Some people say, hey, let me pay taxes and be done with it. I want to have a good night's sleep at night. Fine, no problem. Our job is to educate, your job is to approve or reject. We appreciate whatever is your decision, and then we execute that on the tax return.
Lot of good insight, Sudhir. I didn't know many things. We are learning as we talk, and definitely saving in a different active or passive way. This is a good education, and definitely that's all magic only a CPA can do, right? And it's all good for the businesses, and also if anyone is a citizen who is doing business or who has a lot of money can save. But what about the employees? Do we have any ways where you can save their taxes?
Yeah, there are. Again, when you say employees, there are employees who make $50,000 per year, employees who make $5 million per year, right? Now, again, planning vehicles depends on where the income falls, because the tax rate is progressive. It increases with the increased income. Above $600,000, 37%. Below $600,000, it goes from 10 to 35%. So we have to see where does the client fall in terms of taxation, right? Then only we can talk about planning. Otherwise, it doesn't make sense. But regular tax planning ideas, which a lot of people do ignore because of lack of education, is simple things like 401k plan. The company offers a 401k plan. Take advantage of it. Our Indians think, I'm going back to India anyways, which most of us don't go, right? I know. We are stuck here, and I think for good. So this amount of money that is tax deferred, meaning you don't pay taxes today, it grows tax free. So that's very powerful. Instead of paying 37 cents to the government and growing only 63 cents, grow 100%, right? Grow 100 cents every year, tax free, and then pay taxes at the end. In between that, we can think of doing a Roth conversion, or we can think of taking the money out when you are back in India, right? When you are back in India, you don't have US salary, you can take the money out that time. And when you take the money out that time, you are in your 10% bracket, you save taxes, right? So simple things like that. So do 401k contribution, take advantage of things like buying a high quality life insurance plan here, because life insurance is the only thing other than two other things which grows tax free, and it is totally protected. So the money sitting in a life insurance plan, which is a permanent life insurance plan. First of all, I suggest to people to think about two types of life insurance plans. One is a term life insurance and one is a permanent life insurance. Permanent means it goes all the way up to 120 years, right? That means your family is going to get that money at some point or other. And that policy creates a cash value within the policy, meaning whatever money you contribute to it, some amount goes to premium, some amount goes to cash value buildup. The cash value buildup is tax free. Nobody pays tax on it. When the family gets the money at the time of death, the family doesn't pay tax. And if you start taking a loan from the policy, there is no tax, right? So life insurance is a very simple and a tool which primarily has to be bought for protecting yourself. I talked about estate plan. This is the second one. Insurance in this country is very important because, we company gives us health insurance. Company gives us maybe $50,000 of life insurance, or maybe 2x or 3x of compensation as life insurance. But buy a lot more, buy at least $1 million worth of life insurance. And keep other point in mind is life insurance in the US is very, very inexpensive, right? A term life insurance of $1 million is so cheap in this country that you can't even think of buying it in India, 7 crores worth policy, right? It's very cheap here. And if you go for permanent, it is going to be permanent. And, even if you go back to India, most of the carriers these days cover a global coverage. So, you are kind of protected, and buying insurance much earlier in age is better, because once you cross 40, illnesses start and all that happens. With the age, the insurance premium goes up. So earlier, get an insurance policy, either term if cash flow is limited, or go for a permanent if you have some savings to be put aside to grow tax free, and then build your wealth. So that's the second idea. Third idea is a 529 plan for kids, for kids education. There is a plan called 529 plan. Even in that, the money grows tax free, but the money has to be spent only for educational purposes, right? But that's a plan option available too. And lastly, for those people, Praveen, you are talking about people who make less income. Why do you worry about tax reduction, right? I tell them to pay tax.
Yes.
If since you're in the lower tax bracket, you pay tax today. You take that, 80% after paying maybe 20% tax. That money, you grow it very well, right? That money, if you invest it in the right vehicles, particularly those Indians who are very young, right? People come here in their 20s, and from 20 to 40 you are considered young, right? You can take risks because you have a lot more legway to continuously work and make more money. And people make more money as they get experience in life. So this money you can invest in good stocks or ETFs or mutual funds and try to grow that. And that growth can be huge, right? And one other point I would like to also make to your listeners here is, think of investing in this country also. Most of us, in our earlier years, sent money, all the money to India, which is good. India needs money, but also retain some money here, because most of us may not end up going back to India, because we will eventually find this country to be our country, and you will get your green card and citizenships and things like that, and you will need wealth at that time. If all your wealth is sitting in India, bringing wealth back to the US, is not such a easy task. Of up to $1 million per year is easy, but then you have to file your returns, file a lot of forms in India, go through the bank's bureaucratic process, RBI rules and regulations and things like that, and bring the money here. Rather, keep it simple, invest it here. You have great companies here, great unicorns here. Invest in good pre-IPO stocks, regular stocks, mutual funds, ETFs, real estate and things like that, and grow the money. So these are some tips for the youngsters. And for the seniors, there are a lot more ideas. We can always sit and talk and educate them for their specific situation.
Very well said, Sudhir. I think it's a great insight. I think while you were talking for the estate planning, and then you talked about 401k, right? So there is one complex question, because being whenever you come out of India and go to other countries, always you are a confused desi. Typically, that is true, because let me ask you one question on the 401k. For example, most of us have filed our PF in India and then go back to any other country and then pay there the 401k or whatever the term is called in that country, and then we move on to US, and then we start our 401k a little late. So tell us more. Can all this be clubbed somewhere? Is it possible?
No, not yet. World is not that flat yet. World is
Mhm.
flat, but not that much. There are rules and regulations of each country. So, for example, PF, right? PF, when you come to the US, when you draw the PF,
Mhm.
because you got a tax deduction for in putting the money in PF, that portion you have to pay tax in US
Okay.
at the time. The portion which is grown, which is the income portion, you have to pay tax in US again.
Okay.
And that's why we do something called as transition planning. So if somebody is moving from India to here and they have a lot of wealth, when do you come to the US? When do you apply for citizenship? When do you apply for green card? All those steps calls for a lot of planning, right? So unfortunately, there is no one single one button click and all the retirement plans merge. That doesn't exist, and I don't think it will ever exist. At least in our lifetime, I don't think that's going to happen. And but there are ways to minimize tax on that, and there are ways to plan for retirement from in that particular country. We do have clients living in Netherlands who moved to the US, clients living in India moving to Singapore and other countries too. So worst case situation, you may have to pay a little bit of tax, right? So that's all it is. Still tax is not 100% tax. Worst case is 50%
Hopefully,
in
this
country in
pandemic will make it global. So we never know,
what is
right?
that?
This pandemic may make it global very soon.
Yeah. It will be global, but trying to bring the retirement plans of different countries on a global platform, I think is going to be very hard.
Okay, but that's definitely after a certain age we can encash them, right? In each country differently, wherever we are.
Yeah. You can encash it. There is no problem with encashing. When you encash that, there are tax implications, right? No tax implication in the country which you have earned and deposited, and in the country in which you live. For example, PF in India, which somebody has earned in their initial years, and now they have become US residents, green card or citizen or H1 residents. Now, when they withdraw that money, they have to pay tax in US. Now, clients come furious to me. They're like, why should I be paying tax on that money which I earned in India? Then I have to explain them what residential status means, what legal status is, what green card is, what we all are running behind green cards. When you are moving from H1 to L1, we tell them, boss, it's not such a great thing from a tax point of view. Keep that in mind. But yeah, from long-term point, career point of view, ambition and all that, it's great. But green card and citizenship from a tax point of view is not so good. But if you are able to live with it, it is okay.
Absolutely, absolutely. There are a lot of complications, Sudhir, as you said, definitely from one country to the other country. Especially, you also told one point, getting money from US to India is easy, but getting money from India as a dollars to US, it's very, very tough. So definitely planning is very, very crucial.
Mm-hmm.
And in the interest of time, Sudhir, I think we can talk on and on.
Yeah.
And definitely, I would take another 2 sessions with you because we did cover wealth planning, we didn't cover about real estate planning
Yeah.
and life insurance and those kind of stuff. But before we go, I wanted to ask one crucial question. During this pandemic,
Mm-hmm.
there is a huge bubble in real estate, right? So throw us more light on what you see for the
So
buyers to buy or not.
the bubble is there everywhere. Inflation rate is so high, and it can be called a bubble. It can be also called pent up demand, which is transitory inflation and things like that. Different people use different words.
Mhm.
But bottom line is, you just think about this, right? When everybody is sitting at home and suddenly everybody comes out, there is a demand. Now,
Yes.
when there is demand, the price goes up, right? That is what happens to airline tickets in June. When all the kids are out of school, the price of ticket goes up. Again, come February, the rates are down, right? Why is that? Because of the demand. So right now, the bubble in the housing market, let's talk about housing market, because most of your listeners are thinking of buying a house or maybe rental properties. In the housing market, there was a huge demand, from the date vaccines were introduced to even now. And there is a shortfall, there is a shortage of homes. The recent CNBC report said there is a shortage of 5 million homes.
Wow.
Now tell me, where is there a bubble? So the bubble may be felt maybe 1 year from now, or maybe 6 months from now, or 2 years from now. We don't know, because till all this need is satisfied, I think the price is going to remain high. And if the interest rate goes up and people decide, okay, I don't want a home, let me live in an apartment. Why do I have to buy a home, right? Logic changes when things change, right? Right now, everybody is like, rate of interest is 2.5%, 3%. Let me buy a home. It's cheaper than rent. Let me enjoy sell my own home. Now those things, when it changes, that's when demand falls and pricing falls, and that's when a person who has bought today may feel, oh man, I bought it for at the highest point. Now keep in mind one thing: you don't buy your personal property to sell, you buy
Absolutely.
your personal residence to live. Right now,
Live.
if the price goes up down, it doesn't really matter, at least for 3 or 5 years. That's why IRS also says, if you live in a house for 3 or 5 years, and when you sell, if you make up to $500,000 of gain, you don't have to pay taxes. That's another tax planning tip for your listeners, right?
Yeah.
uh,
Oh,
yeah. So coming to the answer to your question, there is a bubble. There is a bigger bubble in the stock market. Now, when this correction will happen, we don't know. September is usually the month. September, October. I think 2021 may be a little weaker year than 2020 because of the bubble getting formed so big. We saw some bubble bursting in the growth stocks in February of 2021, but
mhm.
again, it's slowly coming back. So it's all about, how long are you in the game, right? If you are in the game for 6 months, then don't enter the stock market or the housing market now. If you are in this game for next 5 years, 10 years, 15 years, there is no entry point. Any day is an entry point. Now, if you're trying to time the market, now that's anybody's guess. Nobody has a crystal ball. It's impossible to time the market because it's made of sentiments of billions of people. So keep in mind, talk to your realtor, talk to your CPA, talk to your attorney, talk to your doctors, and take your decisions.
Definitely. Definitely, we are seeing all of a sudden because of the pandemic, maybe everyone are working from home. Everyone want a big home where they can sit. I was just thinking that is the main thing, and the interest rates. So, from your perspective, as soon as the interest rate goes up, then this will fall back and the correction happens.
Correction has to happen because right now, lot of homes are getting built, lot of real estate is being developed. Demand will taper down at some point, and interest rate as it goes up, people will change their priorities, right, from buying to renting. So this up and down will always happen, Praveen. As you and I know, we have seen enough recessions and enough corrections, but always it's an opportunity to buy during corrections and not to cry when it goes down, right? uh,
Absolutely.
Long term, everything works out fine. And buying opportunity is right now there in commercial real estate. If you are thinking of buying a building for your office, maybe a good time to buy, right? Because during pandemic, people thought nobody is going out. People are sticking into their house. So all these are illogical, meaningless assumptions that we make. This is all because of our short term thinking.
Yes,
This
you're
world
right.
has existed for a billion of years. This world will exist for billions of more years. We are all like a small ant in front of this mega earth, right? If we keep that in mind, and if we keep our ego far, and if we believe that we are very tiny people in this big earth, everything is very simple, right, Praveen?
Absolutely, absolutely, Sudhir. You have rightly said. So, in the interest of time, I think we will continue these sessions on the. See, there are more questions from the viewers, especially on the NRIs floating around between US and India. What are the different types of taxes? How can we save? Where to buy the properties? How to declare the properties? So those kind of questions we have not even covered, Sudhir. So definitely we need your help for couple of sessions more, especially on this international taxing, and also the other one is wealth planning.
Sure.
So, as a closing message, what would be your message for the NRI community? How to plan taxing in this financial year?
Sure. That's a great question and good question for the end. So, my 2 cents to all your listeners who are ambitious, career focused, family oriented Indian citizens, today US citizens or green card holders or H1s, L1s. This is for us, every day is a starting point. We have
Mhm.
not touched the end yet, right? There is so much more good to happen on a daily basis. Yesterday another space shuttle went to Mars, to the space, right? So things are all going to a different level. This COVID-19 pandemic really helped people to sit inside their homes and
Think more.
think more productive, think beyond imagination, and a lot of people have done that. So that means it is like that time in the dot com when .com happened, when internet came into picture, right? This is next phase. 2000 was the first phase, 2020 is the second phase. Every 20 years, I think this will, or maybe shorter durations, this may happen. So for us, somebody like us who are in our 20s, 30s, 40s, 50s, 60s, and even 70s, these days 70 is also considered young, there is a lot of opportunities. Don't do anything wrong, right? Try to do everything right. Don't cut short, do everything right, because every day is more opportunity. And instead of doing something wrong, using a shortcut and getting into trouble, go long and do the right thing. Pay tax, that's fine. Do the legal side of tax planning, that's fine. Manage your wealth very well, grow your wealth very well, don't lose your wealth, and then take care of your family, your health. And there are enormous opportunities from now on. So my only last point to your listeners is, think positive, think big, and think beyond your imagination. And next 10 years is going to be a bliss.
You are absolutely right, Sudhir. I think the main points, if I were to recall from your message, health is wealth. That's the first one.
Yeah,
Be
health.
legal, do legal, plan very well, protect your wealth, improve whatever you can. And there are many opportunities. And Sudhir, before we close, I wanted to ask you, during this pandemic, what are the innovations you have done in your My Tax Filer or whatever the wealth planning? So, what was your innovation or thoughts during these 2 years?
Yeah, this is a great question. So see, 2008 was a recession and I started My Tax File. 2020 was a recession and I started Legacy Wealth Planner.
Wow, that's
So two businesses in recession. My Tax Filer saw a great upside, from 2008 to 2020, and we continue to be growing very well. We call ourselves in My Tax Filer 2.0 in 2020 and 21, because we have done a lot of things in terms of technology improvement, or our franchise program, our overall systems. And my wife Supriya, she has taken over the business. I have gotten out of the tax business. My focus is totally wealth right now. I help people manage their money, and I help people reduce their tax. So I have a lot of investment ideas. I have a lot of hedge funds, a lot of different ideas which typically no financial planner in the US today has got, is what I can say. That much of innovation and improvement we have brought to this financial planning space. So, and I'm very proud of it. We have done extremely well on the amount of money that we are managing, and we have done multiple things. Pre-IPO funds. We have SpaceX, we have ThoughtSpot, we have Kraken, we have a lot of these unicorns in our portfolio. We have liquid assets, we have real estate assets, we have hedge funds. We are buying a lot of properties here in Dallas and Florida markets. So this is only innovation, right? This time that we got to innovate, to read, study, talk to people over Zoom and Google Meets and all that, put a strong foundation to the business and help the tax business and the CFO business grow to the next level, is what we have done. And we have built a lot of relationships in this last 1.5 years. Health improvements have taken place. Families have got time. We have spent more time talking to people in India, also families back in India. So I would say this is what innovation is, right? Beyond what a scientist like you would do, or engineer like you would do, or a doctor would do. I am a CPA. I'm a boring CPA. All I can do is read it, So, and I think we have done our bit.
I think that's a great insight and great thoughts what you have built. And especially, I was really fascinated about your idea during the recessions. You have opened your entrepreneurship and you are successful. So, to all the viewers, I think this is a great inspiration from Sudhir Pai about his entrepreneurship journey starting in the recessions, and he is sustained and he is flourishing in those. And we wish you all the best to you and Supriya as well. And definitely from Mana TV and TV5, we are always there to help you grow your businesses, Sudhir. And with that said, thank you so much for your time. And we will have continuously another 2 sessions definitely to cover main areas, Sudhir. Thank you so much for your time. Have a wonderful evening.
Thank you very much, Praveen, and thank you to Mana TV for giving me this opportunity to be on air and talk to your beloved listeners. Thank you.
Thank you, Sudhir.
Bye.